Good afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. Hope everyone is enjoying their January weather. Turning to the markets, we finally had a negative week here across all major benchmarks, ending about 3 consecutive weeks where everything had been in the green. Coming into Tuesday, the Dow had actually been up for 6 consecutive sessions. So we finally had a little bit of a pullback there. Nothing that we're too concerned about. Markets had been on a pretty incredible run there of late, and valuations had got a little bit stretched. It's important to remember there are about 3 things right now that are moving markets tremendously. That's first is the opening of the economy is going well, and some of the fast data numbers that we've seen and been talking about would show that reopening is going fairly well. Second would be stimulus, whether it's been sufficient or not. We would probably all agree that so far it has met the challenge, but a lot of fiscal authorities are actually talking about doing more. So that bodes well for the continued recovery. And third, valuations. Again, to my earlier point, valuations got a little bit stretched here the last few weeks, so you've seen a little bit of a pullback there. Equities did overshoot to the upside. We're just sort of recycling a little bit of the shares down to maybe more realistic valuations. There's a really good chart and table in this week's Market Watch Weekly that just looks at the breadth of this market rally. It has really been historic, with over 90% of S&P TSX constituents actually trading above their 50-day moving average. That rarely happens. So it just goes to show this this rally that we've had the last 2 months. It's really been incredible from historical perspectives. As far as that 90% and 50-day moving average is concerned, there's a table in there that dives into sort of historical precedences and what this means for the next 3, 6, 12 months, all of which are higher. So that 90% breadth move is generally a very good positive sign for markets. And we expect a little bit of consolidation here near term, but thereafter it should be a positive runway. And that'll do it for the Market Watch today. Hope everyone enjoys their weekend, and we'll talk to you again next week. Cheers.